Good evening, everybody, on this fine Tuesday evening here in Denmark. In the morning I did a recap on commodities. I hope you check that one out. I had a massive headache, so don't expect me to have a lot of what's it called? Happiness, whatever. I had as mentioned, a big headache. It's gone now, and I have prepared a video where we look at different ratios within uranium. So we compare uranium to other categories like the NASDAQ, gold, and so on, and just to see where we are. I think it's a good take to do the ratios because then you can see what is outperforming what, basically. And so yeah, let's dive into it. As always, subscribe to the YouTube, follow me on Twitter, leave in the comments below if you agree or disagree, or if you have any questions, anything to share and to add. I will always reply to them. So let's do this. As mentioned, I have 8 charts. Anyways, close to 10. My math is bad today. This one you have seen many times before on the channel. We go through it on more or less every uranium recap. But again, I want to highlight how important it really is. This is the URNM divided by the uranium spot price. So basically, I'll give you some history also. Right over here was the start of the bull market. It started a bit earlier, but from a ratio perspective, this was the start. You have the inverted head and shoulders over here, and then you have the big move up here. We can do the measured move to see where it actually should have taken us. Right here. So up here was actually our neckline measured move. Right there. We want to switch it to purple. Okay. And then we remove these bad boys here. There it is. So that measured move was hit based upon this formation. Obviously, we had some more upside, but still the measured move was hit. After that, you can also actually see that it is support and resistance after this line was created. So it has valid still. And what happened then? This was when Sprott entered the uranium market with buying the U.UN, and then we had a blow off top for that move up. And ever since we came down, tested this upgoing trend line here, and that basically confirmed that we are no longer in a bull market for URNM or the uranium miners. Now it looks a bit different. As you know, this is the main trend line that I have coming all the way down. Right there, we have this connections and that one, and what is happening right now is very, very exciting to me. We have almost a breakout. We're toying with it here, but I think we will get there. Also, this is an inverted head and shoulders at the bottom. We have the neckline here. So we can do the measured move from the neckline to the top and see where this small formation will take us. I think we'll go way higher. Don't get me wrong. But this is where I think we will go. So we will go roughly to this high here. Makes total sense, right? So that's the move we get when we start to really gain some momentum here. Hopefully when we get the final breakout here. Again, when we do get this breakout, in my view, that's also when we start the next leg up. We have started it already, as you can see on the uranium miners. Actually, right here, we started back for URA and URNM, but it took some time to break out on the ratio. And this might be the same. We have broken out this week, yesterday, and then we might need a week or two to really confirm this breakout as well. So yeah, that's the way I think we will go. How high will we go? I think we'll have to follow the charts. I don't have any way to measure that one. If anyone do, please let me know. But for sure we will. I think we will go up to this group here in this move. If you do the URA divided by the uranium spot price, you will see why. But you can do that yourself. So very exciting here. Waiting for the breakout, getting above 0.65, give or take. That's when it's confirmed on a weekly. So, and we're taking a bit of a pause today, which is totally fine after 2 big days, actually, or 2 big weeks. So totally fine. Here we have the URA divided by the XLE. And I took the URA here because the URNM only goes back 2 years, 3 years. So again, this is the Fukushima gap, in 2011. Ever since, one big bear market. And this to me, as you can see here, actually in early 2020, just before the big event, we actually had outperformance by URA over the XLE. But it wasn't until here in November 2020 where uranium miners really started to kick off. This again here was the confirmation that URA is no longer outperforming the XLE. And if we look here closer, what's happening now, at least the way I see it, let me remove that doodle right. Never mind. What I'm seeing right now is this white one here is actually a neckline coming all the way across. There it is. We have the one touch here. We have the second touch here. Left shoulder, complex head. It's a double head. And the right shoulder right there. And what's happening within this blue wedge, let me remove it for you. The blue wedge, which we have right here, is like a 3-month-long wedge, which we have broken this week. So I think that we have 1, 2, 3 connections, and this will be the fourth where URA is again outperforming the big XLE. Exactly what we want to see. And then obviously we need to get above 0.3 in this ratio to get the confirmation of this inverted head and shoulders. So yeah, it's really trying to do its best to put it in a bottom. Well, URA is trying to put it in a bottom against the XLE. So very constructive here. Again, we haven't confirmed anything yet. This is just the later part of this move, this formation, I think. Here we have the URA divided by the NASDAQ. Again, up here, you can see the Fukushima gap, bear market against the NASDAQ for like 10 years. And what's happening now is a bit more, it's not that much of an obvious bottom to me, but I'm trying to put the pieces together. And I have 3 big levels here. You can see them. And this was the start, the late November, late 2020, when URA really started to kick into gear. And ever since we have just, as you know, the peak again was here, and then we just went sideways in the URA, or actually downwards in the URA. But what I think is happening now is that we have some sort of a cup and handle pattern trying to play out here, right there. And also, if you go into the more detailed view, this, you can see it here, that one, is a smaller neckline for this, a bit of a complex inverted head and shoulders, but still, what we're fighting with now is actually to get above this 0.005 level, the one that comes across all the way here. I hope you can see the white on white here, but still, I try to make it as good as possible. Then we will trigger the outperformance, at least in the short term, over the NASDAQ. And that could roll over into a longer term outperformance if we can then snap this one later on in time. But this right here, to me, is very important that we can get above. But yeah, I think it will happen if when we look at the other charts as well. But again, we cannot celebrate until we get above this long-term support and resistance line that we have right here at 0.0015. Also, this is the 200 weekly moving average that is coming up now, so that's quite nice. Okay, excuse me. Yeah, that's it. URA divided by the CRBs. Quite simple, I would say. This was the uptrend channel. You can see it there. It's still valid all the way up. And we have this horizontal line here at 0.084. And yeah, we're basically just waiting to see if we can break this here. You can see the wicks. That's a wick right there, right there, right there. All the connections over here. So the weekly close above this line here at 0.084 is what we are looking for, in my view, so we can have the uranium miners outperforming overall commodities, the CRB. And obviously, we don't want to have this lower rail here taken out to the downside. So these are the two things I'm looking at, the white one and the lower rail. XLE divided by the SPY. Again, I've shown this many times. It's not uranium specific, but it's energy. So, and uranium energy is so related. Here you have the bottom, the big inverted head and shoulders. The measured move for this was up here. So we overshot a bit, but you can see how valid this move were. And then we had a bit of a rounding here, and then we went into a long-term bull flag into this long green upsloping trend channel right there. There it is. And we have broken out. So right now, XLE is heavily outperforming the SPY. And that's exactly what we're looking at. I love it. The URA divided by Bitcoin. And why Bitcoin? I know Bitcoin has been the best performer for the past 10 years, no matter if you like it or not. But actually, what I'm trying to look at is, can we have URA outperform Bitcoin? Then again, meaning that more money will flow into the URA compared to Bitcoin, which is quite significant if you think about it, outperforming the past 10 years best performing asset. That must be something to look at. And here it is, boys and girls, for that matter. Breakdown. Test here, testing. This is the big level for me. I don't want to put all the zeros on. It's roughly 0.0009, give or take. That's the level to break through. And then we're also getting back above the 200 weekly. Oh, excuse me. And then we have this one, the long-term golden trend line here, which is the final nail in the coffin. So if you can take out these two, the white one and the golden trend line right down there, that really means that uranium will heavily outperform Bitcoin over the next long term, over the next year, 2-3 years. That's quite nice to have having uranium outperform the Bitcoin. Here is a complex ratio I've tried to make. I don't know if it makes sense, but to me it does for some reason. The URA, as you can see there with the text on the back, divided by oil divided by the uranium spot price, meaning if oil goes up, means that it will pull the URA down because this number in the parentheses here gets larger and vice versa. So what we really want to see in this ratio, the way I see it is, we want to, when we are going up, it means that the URA, or it means that the dollar is the oil is going down, or the spot price is going up. Or a third option is that URA is simply outperforming the ratio in the middle here. But what I'm trying to show is that we have a massive long-term inverted head and shoulders right here with the neckline here. And to me, this looks like that when we break it, because I think we will, that's when URA or the uranium miners is finally outperforming the input cost divided by their underlying metal for a very long time since that has happened, actually. You need to go back into just after, the 2000 into 2008, 2007. So this is one ratio that I'm looking at, and the trigger is at around 20, between 19 and 20. That's when you really see uranium miners finally getting more money for their value, meaning what they dig up from the ground compared to what they put in from an energy point of view, at least. So yeah, very exciting. Again, let me know what you think of this ratio, and yeah, do you think it makes sense? Yes, no? I don't know. To me, it makes sense, but I'm happy to hear what you guys are saying, or you have in mind. So yeah, leave a comment. As always, uranium is looking mighty fine. I will not show the URA or the URNM because we cover them 2-3 times a week. I just want to show ratios, and overall, I think uranium is, some has broken out and some are just having some very constructive reversals or bullish pattern that is waiting to the breakout, to the upside for that matter. Everyone, have a great day. And if you love uranium, type uranium in the comments below. Give me that thumbs up, the subscription, all that good stuff. You know what to do. And have a great day. Bye, guys.